The broadcast is now starting. All attendees are in listen-only mode.
Welcome traders to today's presentation on how you can actually dominate the markets with at least 87% winning accuracy. I want to thank you for taking some time out to join me today. My name's Michael Guess. I'm the president and CEO of TradeSafe. And what I would like to share with you is how a rules-based Boolean logic mechanical trading system can actually replace that discretionary subjective approach you've been using and actually achieve real consistency in your results. And before we get started, I want to make sure that you can see and hear what I'm doing. If you would, look in the top right corner of your main monitor and you will see a little narrow vertical strip with a few buttons. That's the GoToWebinar control panel. You can always move it out of the way if you don't like where it is. But if you look for the button that is the topmost one, I believe it's yellow with a left pointing arrow, click one time on it. It'll cause that whole thing to slide over out of the way and it'll reveal a hidden window. That's where you can type out your questions and so on. What I would like you to do though instead right now is type something and let me know that you can see and hear what I'm showing you. Oh, thank you so much, Ronald and Keithan. Oh, good to see you. Yeah, also Michael and Randall, Hans. Thank you all. I appreciate you taking time out for joining me. Hey, Richard, both of you, both Richards. All right. As I was saying, I want to get started here and introduce myself. This is me, Michael Guess, and I want to thank you for taking this time out, but I want to make it worth your while so that by the time we're wrapped up, and by the way, I have a little surprise for you. Other than the standard presentation that I normally do in these workshops, I'm going to switch it around a little bit today. So if you've ever seen me before and you say, oh, he's doing the same old, the content will still be the same because that is always essentially what I want you to know, but I want you to see a different trade today. So we're going to actually show you a trade that is not from some time in the far past. It's going to be from just a day or two ago from this week. So hang in there because I'm going to start out with a promise. Three of them, actually. I start off by saying I'm going to replace uncertainty in your trading with consistency. Because isn't that what you want? I know you're not going to win on every trade. Nobody does. But you want some consistency, some stability in that equity curve. I'm going to show you how you can do it. Second promise, I'm not going to just try to get you interested in TradeSafe. I want you to know how you can start using this material in your own trading. So I'm going to give away some actual trading tips. I'm going to borrow them straight out from the TradeSafe system so you can try them out on your own. And finally, I'm going to show you exactly what it takes so that you can stop that discretionary approach, subjective approach, and end up being more like a machine. So these are the three things you're going to come away with. And why am I qualified? Well, a little bit about my background. I've been a professional trader, a day trader actually, for over 25 years. And I started TradeSafe about 20 years ago. And I've graduated something like 4,000 students along the way, but I have created a whole host of custom indicators and trading systems, of which today, of course, I'm going to share the TradeSafe mechanical trading system with you. But before I started all of this, before I was a trader, in a past life, you might say, I was a psychotherapist and a performance coach before that became a thing. And that qualifies me to know exactly what it takes to help my students when they join the TradeSafe program manage themselves emotionally, keep their discipline intact. So we'll talk about that more a little bit later, but that was my prior background before I became a trader. Well, after I became a trader, here's some of the things that also qualified me to build on. Way back in prehistoric trading times, that's in the late 90s, we had this thing called the dot-com bubble. Actually, we're in a bubble right now. I hope it is going to be a safe exit from the bubble like we did. We got out of the dot-com bubble, but while we were in it, we had this thing called volatility. Right now, especially during the just finished month of February, oh, the volatility was horrible. And it was really, really hard to trade the markets if you were a day trader, that is. And I learned what not to do. And I share those things with my students in my classroom, in the trading room itself. But after that, about 10 years into the future, around 2008 and 2010, we had the big recession. Our trade safe system was still cranking out the profits. So we didn't suffer during that time, nor are we hurting right now. As I mentioned, along the way, I've coached quite a lot of students, and I'd love to have you be one of my students. And by the way, if you have to leave early, some people have already typed out that question. Are you recording this? Yes, it is being recorded, but I really would like you to stick around and ask me questions in real time, and I'll do my best to answer everything that you type. Of course, I do have a method for answering your questions in much more detail other than during this workshop, and that is you'll get a follow-up email. You're going to get the replay, of course, a link to it later this evening. So stay tuned if you want to have a nice review of everything you've watched, or if you have to leave early. I hope you don't. You can always watch it. There'll be a link, but also there'll be another link that'll let you look at my schedule. And you can find a time and a date that works for you. And you can select that and book a slot where you can have a personal consultation with me. And this won't be a sales call. People, you've heard me say this before if you've attended any of my previous sessions. I don't do any arm twisting or hard sells. That's just not my style. What I do, though, is I believe that you're intelligent enough to make up your own mind. Very different, isn't that, from what people do in this industry? Yeah. So I'll give you a full hour of my time to answer all your questions. I'll be very truthful and candid, and you'll come away feeling your time is well spent. Now, before we dive into the actual content, I want to go through this real quick disclaimer. Two things. First of all, the FTC, that's who regulates the internet. They say that no one is allowed to make any kind of promises or guarantees. It has nothing to do with trading. It could be weight loss or something else, but I will not break that law. What I will do sharing with you a little bit later is I will share with you our track record so that you'll have a reasonable idea of what you can expect. And then finally, if you're a beginner, this is all new to you. I hope you're not trading with money you can't afford to lose. Please don't do that. Make sure that you have discretionary income before you start trading. Okay, now that we've done that, I do want to reflect on something that happened about a week or two ago. It's now old news because everything that's more than 15 minutes ago is considered old news, and that was GameStop. Remember that? People were on Reddit and they were trying to game the system, pardon the pun, by doing what's called a short squeeze. And that simply means when the big guys were trying to sell short because they thought GameStop really deserved to be sold short, they didn't think it was going to survive. A whole lot of people who really weren't traders, they were people who were hoping that they could make some money, or maybe they just wanted to flip the bird to the big boys. They bought instead. And some people made a little bit of money. Some people made a little more than a little bit of money, but a whole lot of people got hurt. The problem is that they weren't real traders. You need to know the rules of the game. And what I'm here to show you is that with an authentic, true trading system, you don't need to be an impulsive trader and use stuff like GameStop. Instead, you can actually use what the professionals use, real mechanical systems. But before we dive into that, I want to point out something. Probably most of you, if not all of you, come from a background of what's called position trading or swing trading. That means you get into maybe you buy some stock or something else and you hold on to it for a few days, few weeks, maybe a few months. That's called position trading. Well, there's some real disadvantages that I do want to point out to you before I go forward with what I want you to know about the trade safe system. If you're considering position trading, first of all, it takes a lot of money to play ball. These are margin requirements that your broker requires you to keep a large enough account so that you don't get hurt. Obviously, if you're going to be a day trader and you're out of all your positions by the close each day, they figure you're a lower risk and therefore your margin requirements are a lot lower. We'll address that in a few more minutes. There's also this issue of, hey, I got into a trade today and okay, it's after supper and I heard some bad news on the evening news. Oh, I hope that my trade isn't going to hurt me. You have to wait till tomorrow to find out. That delayed feedback can produce a lot of stress and anxiety. Makes it hard for you to sleep. You got to wait for the open the next day to see if you're still in your position or if you got stopped out. And I sure do hope you are at least using a safety net. Use those protective stop loss orders. But here's something a lot of people don't think about very much: accuracy. You know, the further out you go in terms of your time horizon for position trading, by that I mean if you hold your position for more than a day, certainly more than a week or even a month, the accuracy, the likelihood of having a winner gets much lower and lower. Your odds aren't so good. So if you want to be a position trader, it's a whole lot harder to have winners. Your accuracy is really, really low. On the other hand, if you want to consider day trading, and we'll get around to whether or not you would qualify or whether you can have time enough to do it and so on in a few more minutes, so stay tuned. First of all, it takes a whole lot less money to be a day trader. If you wanted to day trade the stock market, which is what most people assume, well, it does still take quite a bit of money. The SEC that regulates the stock market says got to have $25,000 in your account if you want to day trade it. I got a tip for you. Don't trade the stock market. There are other markets that you could trade that are a whole lot easier. You'll have less problems at tax time because if you, let's say you make a six-figure income when you're day trading the stock market. Well, whatever your tax bracket is, as much as 37%, that's a big bite. But if you were day trading, say, the indexes, we've all heard of the S&P, the Dow, the NASDAQ, and the Russell. Well, those live in the world of futures and commodities. And they are a whole lot easier and simpler to trade. They don't have the tax penalties. In fact, it's a 60-40 split. 60 cents of each dollar that you earn day trading any of the indexes is taxed at the low long-term capital gains rate of only 15%. And then the remaining 40% is whatever bracket you do finally fall into. And if you are trying to start out day trading, say, the indexes or the currencies like the euro and so on, guess what? The margin requirements can be really low as, say, $500 for each contract you trade. That's a unit of measure, just like a share of stock. Or if you trade options, you've heard of contracts already. Now, here's the big advantage also. When you're in a day trade, you're in constant control because they only last minutes. Very rarely do any of our trade safe trades go much more than 15 or 20 minutes. The average trade is anywhere from a minute or two to maybe a dozen or so minutes. So that means by the close each afternoon, you're out of all your positions and you can sleep peacefully. You don't have to worry about overnight exposure, and that's what keeps those margin requirements really, really low. But finally, let's come back to that thing that most people don't look at: accuracy. you have a whole lot higher accuracy in day trading because you're trying to be correct about the outcome of your trade just for the next several minutes. And that's a lot easier than trying to be accurate about the outcome of your trade over the next few days, weeks, or even months. So keep that in mind. It's just flat out easier to be a day trader. It's less stressful, it takes less money, and if you would like to hit 87% winners or better, and this is not hypothetical, this is what my actual students have achieved over the last 2 years that we've been tracking that statistic. All of them on their own without me telling them what to do, have on their own achieved at least 87% winners. And this leads to what you really want. The true holy grail of trading is consistency itself. So if you want all that, that means your capital, your money, your trading account will go so much further because then you can diversify. You can say, okay, I'm going to trade a little bit here and say the index is a little bit over there and maybe the currencies and so on and so forth. You can spread it around. But a lot of you are still stuck in some of the myths around day trading. So let's address those. First of all, too many people assume it's complicated. Well, I'm sure there's some approaches out there that are really complicated, but I can tell you the trade-safe system is very simple. I have taught an 8-year-old boy how to do this, so this is certainly not rocket science. Another assumption is, oh, you better be really quick. You got to have fast reflexes. It's really for 20-somethings who treat it like a video game and shoot anything that moves. Nah, you don't. Not with our system, because we take a much more strategic approach, kind of like a chess game, where you plan ahead and you see what's coming and you park your order and let the actual market trigger the trade itself, go through the order and put you in the trade. And when we go to the charts and a little bit later, I'll actually show you how we park the order and let price action put you in the trade. Okay? All right. And another one is, oh, I don't want to sit there all day and get a brain fog, eyes straining, hemorrhoids, and all that stuff. Well, you could if you wanted to. I personally don't want to. I preach that you can just do this as a part-time thing. You don't have to sit there all day. That's because we have something called cycles, which means you don't have to be staring at your screen all day long. Part-time trading is possible. It's made possible because just like that zoom lens on the camcorder on the right, you can see the big picture. That's the wide angle. What's the broad picture of the market doing for a big chunk of the day, maybe half the day or all of the day? Is it trending or not? That would be a setting on a chart that's high enough to give you the equivalent of a wide angle perspective. But if you zoom in about 300% and look at what's called the dominant cycle, that lets you know what the market is likely doing trend-wise for maybe an hour or two. But you really want to keep your risk levels very low when it's time to take a trade, so you zoom in even more, a much smaller setting chart setting. And that would be maybe a 1 minute or a tick chart setting. That gives you the low risk surgical entry that I like to call it. So you use a zooming effect with your chart settings. Please don't use the drop-down menu settings that are in your Thinkorswim application or any amateur software. I personally recommend NinjaTrader because, as we say in Texas where I live, don't take a knife into a gunfight. Don't use amateur software or tools. Use the same software that professionals use. And I highly recommend NinjaTrader. And no, I don't get paid to say it. I don't get a nickel from them at all. I have been using it for about 8 or 9 years now. I started out many, many years ago on things like TradeStation. Unfortunately, TradeStation has not kept up. It's so 20th century, and we're in the 21st century now. So I recommend NinjaTrader because that's what I wrote my system for. So if you do that and you can adjust your settings on your charts to exactly what you want, and I'm going to give away those settings to you in a few moments. so that you'll know exactly how to do that and play around with them yourself so you can adapt to what the market can give you. Because here's a fatal mistake that beginners make. They assume that all the markets are the same and it's a one size fits all. You know what? You and I have different personalities. So do markets. So how do you discover the personality, if you will, of a market? Ratios. You avoid that one size fits all, just like I've got those three charts there. Each one is a different setting. The wide angle view is the highest setting on the chart on the left. The middle chart is a 300% smaller setting. Another 300% smaller than that is the final chart on the right. That's your most granular view of the market when you're ready to take the trade. So each one of those happens to be in a downtrend, but you're zooming in more and more with smaller and smaller chart settings. This enables you to custom tailor your trading based on what the market can give you. It's not just enough to say, oh, I have a trend. You need to know how strong is the trend. So how do you determine that? Well, let's give it away to you. I want to give you something you can actually start using right now. First of all, I want to ask all of you, how many of you currently are day trading? And if you are, have you day traded what are called the minis, M-I-N-I-S? Those are like the NASDAQ, the Dow, the Russell, the S&P. Would you give me some feedback? Let me know. Just type it out. Okay. Some of you don't. How many of you do? I'm interested in how many do. You're just starting out. Okay, got it. Well, all right. I am going to make a strong case for how you can actually add to your trading toolbox this thing called day trading. And the example I'm going to give here is just for a little select group of the markets called the indexes, since we've all heard of the Dow, the NASDAQ, the Russell, and the S&P. If you were to look at any of those, and these examples I'm going to give you are for those specifically, but the approach I'm giving you is a formula you can try out for any market that you might want to day trade. Okay? Okay, Richard says he does do the Russell, the Dow, the NASDAQ, the S&P, and the E, and the, okay, he does all four of the majors. Got it. So here's how it works. What you need to do is start out with a daily chart, not the drop-down menu that's in your day trading platform, because that's actually not correct. It's generic. You see those amateur trading platforms like thinkorswim, no disrespect, thinkorswim is wonderful for options trading, but they grafted on the day trading capabilities afterwards. And it's not really a very effective day trading platform. That's why I recommend NinjaTrader. So what you need is the ability to build a daily chart, not from the menu choice that says daily, but out of raw minutes. How many minutes? Well, from the open, and by the way, these indexes are traded in their exchange in Chicago, not on the East Coast where the stock market is traded. It's on this central time zone. So I'm going to say 8:30 is the open, and the close is in the afternoon at 3:15. Now, if you've traded the minis, you do know that they trade around the clock. However, the vast majority of the volume, I would venture to say 95% of it, occurs during what's called the daytime trading session, which roughly overlaps when the stock market is open. It just goes an extra 15 more minutes. So you start at 8:30 in the morning and you go to 3:15. The number of minutes in that span of time is 405. That's your master number that you start with. So what do you do with that? Well, that's of course a daily chart. We want to consider smaller setting charts for day trading purposes. So we want you to take the next smallest number than 405 that divides into 405 without any leftover or remainder. That's 135. Well, it's still too big for day trading. Each bar, 135 minutes, way too big. Let's keep going until we get down to something more reasonable. But the next biggest number that divides into 405 is 81. Still too big. Probably still too big even for swing trading. But if you keep that 3-to-1 ratio I've talked about, so you have the zoom lens effect, you want that 3-to-1 ratio. What's 1/3 of 81? 27. And a 27-minute chart is almost the same as a 30-minute chart, which you will see in those drop-down menus in your day trading platform. But actually, it's more accurate for day trading the minis. Now, you're still not going to use it for actually day trading the minis. You're going to jump off from there and keep the 3-to-1 ratio going until you end up with the final 3 chart settings. So with a 27, 1/3 of that is what? 9. 1/3 of that is 3. 1/3 of that is 1. Here are the 3 chart settings that you will want to use for day trading the minis. Your wide angle view of the market for at least a half a day, maybe the whole day, trend-wise, is a 9-minute chart. Anything above that is not really useful for day trading purposes. When you drop down to a 3-minute level, that's your dominant cycle. But it still could have higher risk than is possible if you could go down even further. 1/3 of 3 is a 1-minute chart, and you know what? At a 1-minute chart, you're at a granular surgical entry level, and that enables you to keep your risk levels really, really small. So there's your 3-to-1 ratio. So what I need from you is some feedback. I know a lot of you are not day traders, but give me some feedback. Let me know if you understand how we got to this point so that you might want to go play with it yourself. Type yes if you understand. Give me a little bit of feedback. And of course, if you're really not sure, that's why you want to schedule some time with me on the phone, and I will be more than happy to walk you through it in much more detail than we have time for here. Thank you. Got a lot of yeses. Now, we have, as I mentioned earlier, had a lot of turbulence in the market, this thing called volatility. Why are we having it? Well, there's a lot of opinions. Some people say it's because of COVID. Some people say it's because of the gridlock in Washington. Whatever the reason is, we've had way more volatility in the last few months, particularly last month, than I have seen since probably the late 90s. So what does that do to the markets? It means that risk levels go up. How? Well, if you've got a lot of volatility, the average bar size is going to be bigger. If it's bigger, then the risk is bigger. So if a 1-minute chart has a bar size where at the most you could risk $100 for each contract you traded normally, maybe even a lot less, well, with volatility, you're going to see risk levels that'll jump way higher. What do? Just not be able to trade? Use tick charts. Now, many of you don't even know what a tick chart is. I don't have time to go into what it is, but I will say this. With a time-based chart, you're measuring how big a bar grows. That's price. Over what span of time? 60 seconds, 1 minute. With a tick chart, you're essentially measuring price changes over, let's say, volume. How many units have been traded? How many contracts in our case? So if you're trading a tick chart with a setting of 144 or 233 contracts, those are Gann or Fibonacci numbers, then every time you've finished 144 contracts that are traded, the bar's finished and another bar starts. There is no time element in it. So tick charts give you more advantages because the average bar size is a lot smaller and you're going to get a whole lot more setups for trades than you will on a 1-minute chart, all things being equal. So I include tick charts as part of our layout, as you'll see when we go to the charts later on. So what I've now shown you is what you can do to play with this with these chart settings. Now this is only half of the equation. Later on in this presentation, I'm going to show you how you're going to be able to gauge, okay, now that I've got these chart settings, how do I know what to do with them when I do get a trade? Do I want to stay in the trade a long time or get in and get out quickly like a scalp? I will show you that and give you exactly the same rules that I use for my own students. So stay tuned. Okay? Clear as mud, says Tim. Okay. Now, I do have people ask me, they say, well, this is all well and good. This is obviously a trend following system. And I will show you exactly how you know it's a trend in a few minutes here. So bear with me. But what do you do when the market is not trending? How do you even know when it's not trending, when it's in chop or congestion? The trade safe system clearly keeps you out of trouble when you don't have a trend to trade. If you look at this screenshot here, you can see at the bottom of the chart those colored bands. The green bands of color are letting you know visually that you're in an uptrend. The salmon pink band of color is whenever it was in a downtrend. What about when there's no color? That's when there isn't a trend. That's when you're in congestion. Now there is a visual aid up above all of that. That's that rectangular box that is overlaid on top of the price bars. And it's just a visual aid that lets you know what the algorithm is using to look back in time and forward in time to do its calculations. It's not actually when you're in congestion. Down below, when there is no color, that's when you were actually in congestion. So you're getting a visual alert on each and every chart that you happen to be looking at. But what if you're not looking at a chart? What if it's hidden? Maybe you're looking at one market or one chart and you've got some other market or other charts hidden. We give you audible alerts also that let you know when you're in congestion. And each and every chart will update itself to let you know when there's a change of trend from up to down or down to up, or in congestion or out of congestion and back into a trend. It'll update itself in real time and it'll notify you, even if you're not seeing it, even if you're not there. Maybe you had seen that it was in congestion. You said, oh, I'm going to do part-time trading. I'm going in the kitchen. I'm going to make a sandwich. Your computer will talk to you and tell you what's going on. It'll say something like 1 minute NASDAQ breakout, fake out. Well, that meant you left a trend and went into congestion. Or it might say 1 minute Dow, new trend. Or it might say 3 minute, or whatever the setting would be, or whatever the market would be. You've got a variety of conditions from whether you're in a trend, whether you're in congestion, whether it's breaking out. It'll notify you it's starting to break out so that you are ready. And it'll notify you when you have confirmed the breakout. Or if you go right back into congestion, it'll notify you and talk to you and tell you, oh, you're back in congestion again. So you'll be told whenever there's a breakout, a fake out, etc. You don't need to guess. So if you're monitoring more than one market, maybe you're looking at the Dow and maybe you've got the NASDAQ hidden, it'll talk to you and let you know, oh, maybe I should be looking at the NASDAQ because it's now giving me something that'll be time to pay attention, because you're going to get a clear signal that it's time to start paying attention. Okay? Are you with me on this? Do you like that so far? Give me some feedback, because I don't know of anything else that notifies you when it's time to start paying attention, both audibly Most of the time you'll hear sounds. It won't talk to you in plain English. And we're giving you both a visual and an audible alert. Okay, but you know what? A whole lot of beginning traders, they focus way too much on entries. The professionals, they focus on exiting the trades because that's where the real money is made. So if you look at this screenshot on the right side, let's say we were in an uptrend, that's why it's green down below. And right up here, we were at the left edge of the screenshot. We were already in an uptrend and we had this thing called a pullback or retracement down to this moving average. I got a big red arrow pointing up to the bottom of that bar, letting you know that's our setup for entering a trade. When that bar and all its conditions are met, you will park an order one tick above its high. And when we go to the actual charts, you'll see me do it in real time. You will wait for price to trade through that order. That's what triggers you in the trade. And then once you're in the trade, well, it depends on which exit strategy you've selected, because we don't wait till you're in the trade to decide what to do. You will know before you enter the trade whether you have strong enough trend conditions for either scalping or scaling out or whatever. In this example here, this would be a scale out where you would have entered the trade right here. This is our setup bar. You would have traded through the order right there. And then maybe a few ticks higher, you would have exited half of your position. That would have paid for your trade, and you can relax and take that hand off your mouse that you've been white knuckling. And then, now that you've already got a paid for trade, how do you maximize your profits? You will have a trailing stop. Your profit stop will just follow along with price and adjust itself automatically in real time. It's automated. You do not have to guess where to get out. It will adjust itself. And I'll demonstrate that when we do the actual trade. So I'm going to skip ahead to that a little bit later and you'll see it in real time. So as I said a minute earlier, you don't have to guess where to get out because your strategies are predefined. We've got 3 different exit strategies based on how strong this trend is. If it's a real weak trend, then it's sort of like in baseball, you'd bunt and get on base. That would be a scalp. You'd get in and get out with your full position. You just want to have a real quick profit, and you'd probably load the boat with a lot of contracts or whatever you're trading, even if it's the stock market. But if you had a very strong trend, you'd want to swing for the fences, and that would maximize your profits. How would you know how to get out? Well, you don't have to guess. As I said, you would hit an easy to reach profit target first of all. That way you've got a paid for trade, and then you would let the trailing stop take over, and automation would do the job for you. So really it boils down to, are you going to scalp or are you going to scale out? And if you're scaling out, that trailing stop will adjust itself in real time. This gives you the highest probability and the most consistency in your trading. Because a lot of people say, I'm not sure where to get out, at a Fibonacci level, at a support or resistance level, or some market profile. I have not found those to work consistently. This has been the most consistent approach I've found in decades of trading. Auto trading, Ronald likes that, he says. Okay, now let's say theoretically that your 9-minute wide angle view of the market, that chart is trending up pretty strongly. Your 3-minute chart is kind of meandering in a downtrend, somewhat lackadaisically. But your 1-minute chart, all in its own little universe, has just begun an explosive rally. They're not in sync with each other. Optimally, what you really want, you want this. You want them all trending in the same direction, but you're not going to get that all the time. If that's all you wanted to settle for, you would get very few setups, very few trades. So what you want to do is adapt and adjust what the market can give you. So here's how my students assess a potential trade. And these are the actual rules that my system has. So you can try this out once you have your 9, 3, and 1 if you want to play around with the indexes. It goes like this. To help you remember, I've got a rhyme, a teaching mnemonic as it's called, and it's simple to remember. The minimum is the 1 and the 3 need to agree. Best is if all 3 agree. That means the 9, the 3, and the 1, and that includes the tick charts if you're going to take a trade on a tick chart, are all trending together, up or down. Well, this gives it the potential for a really strong price move with a lot of follow through. Well, you sure wouldn't want to throw away that trade on a scalp. You'd leave money on the table. You want an exit strategy that keeps you in the trade as long as possible, and that would be scaling out. I will demonstrate a scale out exit strategy when we do go to the charts. But as I already have said, all 3 trending together, you're not going to get that as often. So what if only 2 of the charts were trending together? That would be the one you take the trade on and the next higher setting chart. Let's say that would be your entry and the next higher would be the 1 and the 3. If that's all you got, well, you still have the potential for a decent price move, but you don't know how long it's going to go. So it's going to probably be a weaker or briefer price move. You would most likely want to choose a scalping exit strategy. We also give you the option to scale out, but have your target be a little bit closer to where you enter. So I'm going to demonstrate that one when we do go to the charts instead of a scalp. I'm going to show you a real quick and easy target, and then we will trail the stop. So now that you know all of these, do you think you understand it? If you think you've understood how to determine whether to scalp or to scale, give me a little bit of feedback. Type a yes. Let me know. Okay, good. All right, excellent. Thank you, thank you. So if you do these things, if you use the trade safe system, and again, I'm not going to break the FTC regulations, what can you reasonably expect? Well, we would all love to have that ruler straight equity curve, but honestly, you're not going to get that. I'm going to be as realistic as I can possibly be so that you can have what I think is a reasonable expectation that you can take home. Okay? Now, since we've been using the indexes as an example and their unit of measure isn't a share like stock market is, they're called contracts. And margin requirements, as I mentioned earlier, are pretty small for trading the indexes, as small as $500 for each contract that you trade. How much buying power is one contract? Well, it can vary depending on how much volatility there is. It can be anywhere from $65,000 of buying power all the way up to maybe $100,000 or so. What I recommend is in my course that you trade anywhere from 2 to 4 contracts to start out. That's very small size. So if you're trading 4 contracts at $500 margin requirement for each one, that means you need an account size of at least $2,000. If you're trading 2 contracts, then you only need $1,000. The reason that I'm not saying 1 contract is if you're going to scale out, you need to take off half of your position. You can't take off half of a single contract. So you need at least something divisible by 2. So it's either 2 or 4. I'm going to stick to 4. So how much do I recommend? Well, I don't want you to just be the bare minimum of 2,000, because if your first trade you take out of the box is a loser and you drop below $2,000 because it was a loser, you can't trade 4 contracts anymore. So I recommend a $5,000 account. That means you are much more capitalized than you need to be. That takes the pressure off of you emotionally speaking. And that way you can even afford to have a few losers in a row and you're going to still stay relaxed. Okay? So in the emails that you received inviting you to this presentation, I said, you know, you can actually average around 2 to 4% return on your investment. Your investment, of course, is your trading account. So how did I arrive at that? Which works out to about $100 to $200 a day. It goes like this. If you were to take every trade that you got a signal for, and this is just for a single market. We're not going to cheat and say, oh, you can trade a lot of markets. Let's just restrict it to trading one market only and 4 contracts at a time. If you took every trade that you got a signal for all day long, and you did it Monday through Friday, all week long, for a full month of 20 to 22 trading days. You add up all of the money you made, deduct the losers, and that net profit, if you divide it by the number of trading days, that is how you arrive at your $100 to $200. That's your average per day that you could make. If you take that and divide that into $5,000, that's the 2 to 4%. That's where those numbers come from. It's really easy to achieve. Now, if you are one of the people who say, $100, $200 a day, I'm in the wrong place. I need to make a lot more than that. I understand. If you got a bigger account, then you would trade bigger size. You wouldn't just trade 4 contracts. You'd trade a lot more. But the majority of the people who come into my program, they start small. And I prefer that you even start small, even if you have a lot of money, because I want you to work up to it so that your brain gets used to it emotionally. Because, you know, that's the psychotherapist in me talking. Your subconscious gets all worked up whenever you have losers. So we're going to keep you small, 4 contracts. But you say, oh, I really would like to make a lot more money. How can I, build up? Here's a safe and easy way to build your account. If you started with a $5,000 account and you didn't take any money out, you kept your winnings inside the account, and you built it up to a $7,500 account, that's a net increase of $2,500. If you can do that, and it may only take you a week or 2 at the most, then you can increase the size of your trades from 4 contracts to 6. That's an increase of 2 contracts for every $2,500 that you've built your account. Now, obviously, since you now have a bigger account at $7,500 and you're trading 6 contracts, it'll take a little bit less time to hit the next threshold of another $2,500 worth of profit and build it up to $10,000, right? So you keep doing that, holding everything constant, adding a pair for every 2,500. So you go from 10,000 to 12,500 and so on and so forth. You go from 4 to 6 to 8 to 10 and so on and so forth, number of contracts. Now, if you do that, by the end of the year, theoretically, you could end up with a ridiculously large hypothetical return on your investment. I already told you I don't believe in hype. I'm not going to hype it. Why don't we take a look at what really is real? No unicorns, okay? First of all, I already invited you to consider part-time trading. Instead of trading all day, every day, 20 or 22 days out of the month, I mean, you could if you wanted to. Let's say instead you traded, say, 15 days out of the month. That's a little more reasonable. Maybe it's pretty weather, you want to go play golf or do something else. And instead of trading all day long, you would trade half a day. So instead of making an average of 200 a day, you'd make half of that, 100 a day. So that means winners and losers combined, you would be netting out $1,500 at the end of the month on a $5,000 account. Folks, that's over a 30% return. And if you've heard this presentation before, you already know what I'm going to say. There are hedge fund managers who would literally kill to make 30% return on their big hedge funds in a year, let alone in a month. And we've even done that much or more in a single day. Monday, we did it. We had a huge day. We made over 40% in a big winning day. And I'm going to share one of those trades with you in just a few more minutes. Okay. Let me see what somebody just typed out here. I'm not sure what you're saying. Hans is asking, I understand that you're talking about the 1, the 3, and the 9-minute, but tick charts, what numbers do you use? Well, I already mentioned that. I use a 144 and a 233, but here's something that you need to keep in mind, Hans, and I do teach this in my course. That's part of the package. Volatility can cause the need to adjust your tick charts throughout the day. So tick charts can vary. Instead of using a fixed amount, always use a 144 or a 233. You may want to adjust them. Does this now make sense? Type a yes if you do get it. All right, so let me now go back to, oh, you're very welcome. Oh, I said Hans, and that was JT Trader. I was looking at the name of the person above you. I apologize. All right, well, let me go forward here. I already said we would all be delighted to have an equity curve like that. It's not likely to happen, folks, because you do get losers. It's not like punching a time clock. You know, you have up days, up weeks, down weeks. I will say this, we haven't had a losing month in over 15 years. Losing weeks are very few and far between. Yes, you will get losing days, but here's the thing that you really want to focus on. You and I have different personalities, and you and I are not machines. We are not clones of each other. And this is why, as part of the package that I include, I do something that professionals do. I benchmark you to the trading system. Remember, there is no such thing as a one-size-fits-all. If you are going to be looking at the same setup that I or one of my other students look at, maybe it's outside your comfort zone and your subconscious, which tends to rule the way you operate because you're not a machine. You may not want to take that trade. Whereas another one of my students that saw the same exact setup would want to take that trade. What do you think would influence them? Well, here's how benchmarking works. In my course, first of all, I have you both in my trading room and on your own when you're practice trading on your own. You will have to take every single trade, even if you think it's going to be a loser, as long as it's a legal setup. Why? Because I want you to learn from the losers as well as the winners. I have you journal each and every trade. Because if you're not journaling trades, professionals do, then you're not learning from your mistakes. So if you've been journaling all your trades and taking all of them, winners and losers combined, by the time you get to the benchmarking phase at the end of my course, you will have a body of knowledge based on, okay, I've seen this scenario before. This support or resistance level has interfered with the follow through of my trade. It's never reached its target, or it rarely does. I've tended to have more losers than winners. You see what I'm getting at? You will have an accurate record of your performance in the past that will influence your decision making in the future. Benchmarking includes things like support and resistance, whether the volume is starting to dry up, whether price is overextended. You don't want to take trades during a major economic report being released. That's suicide. There's a host of other markers that are considered contextual variables. I teach you exactly how to utilize those variables so that during benchmarking, you can be highly selective. This is still a mechanical system. You are still seeing the same exact signals mechanically that all my students see. However, because you're a human being and what you've seen and you've traded influences the way your comfort zone is going to affect you. So you may take trades that other students don't take trades. But to prove this, you need a statistically viable sample of at least 30 trades. More is better. At the end of those trades, you're going to meet with me and we're going to review your trading history with the spreadsheet that I've given you. I give you a macro spreadsheet. And I'm going to invite you to look at which chart gave you the best performance. Maybe the 1 minute chart did, maybe one of those 2 tick charts did. And I'll also have you evaluate whether scalping or scaling out gave you the best results. This is going to be a way to dial in the exact relationship between the trade safe system and you. That's how you get benchmarked. And that's why over 2 years of benchmarking, all of my students, not a single exception, have all achieved at least 87% winning trades. So give me some feedback right now. If you see the value in benchmarking and you'd like to be benchmarked and get at least 87% winners. Okay? All right, thank you. Kelly wants to know what tick chart would have been used primarily. And are you saying like this day? I can't look at a whole day and tell you. It changes throughout the day, Kelly, and those are things that are proprietary and I teach within the course. I can give a lot of information away, but I can't give everything away because that's what people who actually invest in the course do get. Okay? All right, thank you. So, you've been staying with me thus far, folks. It's time for an actual sample trade. So what I'm going to do is freeze my screen for a moment. If you're watching the replay, you'll see what I'm doing. I'm going to minimize it and I'm going to bring up the charts. Now I'm going to restore what you see. I need you to all type yes and let me know if you can see my charts. Give me some feedback, let me know. Okay, great. Now, even though I've got more than one monitor, I want you to know you don't need multiple monitors to use my system. It's a myth that you need 6 or 8 monitors. You know, that's overwhelm. Frankly, it is multitasking and that's been thoroughly disproven. The maximum number I recommend is 3. You can even trade with a laptop as long as you have an external monitor big enough to trade on. I, of course, have 3 monitors myself, but I can't show you what's on the other monitors. That's the limitations of GoToWebinar's technology. So I've assembled my charts together on my main monitor, my desktop monitor, okay? Now I'm not going to go into every single thing that's on this screen, but I'm going to tell you what you are basically looking at. Dead center is the 1 minute chart. That's the one we're going to take our trade on. And remember the rhyme, the 1 and the 3 need to agree, best as if all 3 agree. Well, the 1 minute, see this? It's in a downtrend. See that color? Don't just assume because you see lower lows. That is a horrible thing. Whoever came up with that term should be shot. Lower lows or higher highs, I could get 6 different traders and get 6 different opinions about where the trend started. It's too subjective. So this is an actual indicator that shows you when the trend began right there. This 3 minute chart shows when its trend began. It's also down, so at least the 1 and the 3 do agree. But the 9 minute chart is not in a trend. It's actually in congestion. Notice that it's blank after that last green edge. The last 2 bars are in a blank area down below. So the 9 minute has technically had a breakout fake out. It went back into congestion. So I'm not going to do what is called a scale 100, where I'm going to try to hit $100 worth of profit and take off half of my position. I instead am going to use this 1-minute chart and do a scale 50. So I'm going to try to hit an easy to reach target where with 4 contracts, if I can reach $50 worth of open profit, I'm going to take 2 of the contracts off the table. All right. So because we have trend agreement, I don't need to look at all these other charts. You only look at all of the charts for the first of 4 steps to get into a trade safe trade. The 4 steps are trend agreement, and we have that. The second step I'll show you once we begin the trade is a pullback or a retracement. The third step is independent confirmation with being either overbought or oversold with this oscillator. That's the red line. And the final 4th step is risk. You have a maximum amount of risk that you're allowed for scaling out. It's $100 for each contract, and it can be lower. That's right. And you're going to see a smaller risk level than $100 on this trade setup. And I'll show you how you learn and see it, because the readout on this data box right here, this data box, is wherever you put your cursor, you can see not just the open, the high, low, and close, but you're going to see other things. All right. So now that we have the first step, trend agreement, satisfied, I'm going to maximize the window that contains this chart we're going to take the trade on, the 1 minute. I want to even slide it more to the middle so you can see it better. Now, I'm going to turn this on in a little bit, but first I want to draw you a little picture about what you're going to be seeing, what to expect. If you've had a downtrend move and it's reached a low point, that's the first step. The second step is a pullback or a retracement, and it's going to be to a moving average. Now, I normally have the moving average showing, but I have hidden it because I get way too many people in these webinars asking me, oh, what are the settings for your moving averages? So I've hidden it. But you may say, well, how do you know you're close enough to it? Right here, this indicator that says Rule 21, once we get close enough to it, it will show you, and I'll demonstrate it as we turn things on, as we're getting closer. The rules are going to call for a minimum number of bars in the pullback. You can't just spike up in 1 or 2 bars. You also want to make sure that the angle is direct. I prefer a 45 to 90 degree angle. And of course, the most important thing is you want to be either touching the moving average. If it touches, the readout would say 0, or the part of the bar that's closest to the moving average, whether it's just underneath it or it went a little bit above it and it's just above it, must be within a certain number of ticks. That's a maximum distance away. Now, I'm not going to tell you what that is because that's part of the system, but that's the second step. The third step is down here, this oscillator, the red line. I'm not going to tell you what it is because people always say, well, what's your indicator? It's part of the system. Okay. All it needs to do is simply get overbought or oversold. In this case, when price moves up, it's going to get overbought. Real simple. That gives you independent, uncorrelated confirmation from just a simple pullback to a moving average. And last of all will be the risk, and I'll show you that once we get our setup bar finished. So let's skip ahead and pretend that in this drawing that I've got the last bar in the pullback. I'm not going to draw all of these fake bars on the way. I'm going to just say this would be the last bar in the pullback, okay? And that would be what is called a setup bar. It's setting you up for the trade. When all those 4 steps, those conditions are met, that's why it's mechanical, and they're very specific, and the readout here shows you in the data box or in the indicator itself. You then park an order 1 tick under the low of that bar. Now, Some of you may not be aware that you can actually make money in a down market. That's called selling short. So this example is called selling short. We're placing a bet that the market is going to go down. So I'm going to say, if I put a horizontal line here, that would be where I would be parking my order. And let's say the next bar, it could take more than one, but let's say the next bar did trade through it. Pure price action puts you in the trade. Think of what you had in this retracement, this pullback, as if it were a stretched rubber band. And it's got all that built up tension. It's not a change in trend. It's just some profit taking while in a downtrend. And when the market trades on down through that resting order, you're now in the trade and you want to take advantage of the follow through. Any questions on that? Hopefully that makes sense. I'm going to go ahead now and start the actual trade now that you know what to expect. Finish deleting all these lines. And what I'm going to do is I'm going to speed this up a little bit after I turn it on. And then I'm going to slow it down and pause when it is at the point that I happen to know is the last bar in the pullback. And I'll show you how I know it's the last bar, okay? So we're still retracing, still retracing, still retracing. And a little bit more. And I'm going to pause here for a moment when the next bar starts and slow it down to normal speed. Now, this is following that line that I drew. This is your pullback. Let's say this bar right here. How far away from that moving average that I have deleted so you can't see it, how far away is it? Well, look right here where it says Rule 21. It says 12. That means the part of the bar, the high of this bar, that is closest to that moving average, which is up around here, it's 12 ticks away. How about this one? That one is 5 ticks away. How about this one? It is 3 ticks away. How about this one? Ooh, it's touching. So what I would have done at that point, I would have, since I already was not only with being in the sweet spot in the zone, it was 0 in the readout, I would have looked for my third step down here. Is it overbought? You bet. So the third step is satisfied. And how about the risk? Is the risk $100 maximum or less? Absolutely. Now I could have parked an order one tick under this bar's low. And if price would have traded down through it, I would have been in the trade. But right now, this current bar is at the exact same high. Watch what happens if I turn this back on. It went above it. Now, this bar is no longer the deepest in the pullback. This one is. Down here is the counter that's counting the seconds down. You got the luxury of time. It's a 1 minute bar. 29, 28, 27, 26. So what I'm going to do is I'm going to pause it when it's about 4 seconds away from 0. And I will show you how you would place the order. 10, 9, 8, 7, 6. All right, let's pause it. Now right here, this cursor is showing that it's still Rule 21, 0. It's not too far away. It's actually making contact with that hidden moving average. We already got overbought. We don't need to worry about it staying there. Once it's overbought, it's already satisfied step 3. And no, we don't get into the trade if it gets out of overbought because indicators lag. we are going to park an actual order one tick under this bar's low right about now. But hey, what about that fourth step? What about risk? Remember, if you're scalping, the maximum risk is $70 per contract or less, depending on the size of the bar. And if you're scaling out, which we're doing at a scale 50 level, the maximum is 100. Well, look in that data box again, where the blue label is. It says risk, 45. That is a really small risk. So that's all you could lose on a per contract basis. So here's what we're going to do. I'm going to show you how we park an order. This is one tick under the low of that bar. With NinjaTrader, it is real intuitive, real fast, and real easy. You just right click and up pops a menu. I know there's a lot of stuff there, but it's super easy. All the orders are grouped together for convenience, and it's always this last order. This is your sell because we're selling. It's on a stop limit order. That means you don't get any slippage. Once price trades through it, you are guaranteed that fill at that price, and it's for 4 contracts. So let's left click and park the order.
Order submitted.
I'll move this over so you can see it a little bit better. And here is the label. Now that you can see this very graphical, easy to see line. Oh, it's so easy. 4 contracts sold on an SLM stop limit order. Now, if I change my mind, I could cancel it and click the X over here, but we're going to go ahead and go through with this trade. At normal speed, I'm going to turn it back on, and once we're in the trade, I'll pause again to show you what happens after that.
Order filled.
Order filled. Boy, that was quick. Notice a bunch of stuff has appeared on the screen. These 2 lines that are in addition to the one that was one tick under your setup bar, this is your target, $50 worth of profit under where you would have sold short. So if we reach that, half of our position, you're going to buy back 2 contracts and make $50. That'll pay for your trade easy. Up here though is your stop limit, is your protective stop order. Now it's automatically going to put itself at the full measure of $100. By the way, all this readout stuff, you can actually hide it if you want. I'm going to leave it there. It's letting you know the fills that you got. You can move this down. Watch. One tick above the high of that bar. Notice that your stop is now small enough to where it's only $45 worth of risk. Anything after this is automated. This is where the fun begins. These 2 lines representing your protective stop loss order, where the most you could lose is $45 per contract, and your target where you hope to reach and make $50 at least. They're tied together in what is called an OCO, one cancels other type of order. That's a bracket order. So if we didn't hit the target and instead we went up and hit the stop loss order, the automation will cancel this one, straight cancel it. That way, if you forgot to do it, like I did many years ago when I was a beginning trader, I had a winning trade and I forgot to cancel my stop loss order. And I woke up the next morning $4,200 underwater. That taught me a valuable lesson. So I've built in the automation for you. You don't need to worry about it. So let's go forward and see what happens if we can hit the target. But along the way, I've got more automation I want you to look for. This stop loss order, which is currently up here, where you could lose the full measure of 45 per contract, there's an algorithm that knows when certain conditions are met is going to move that stop down to break even, where you entered, plus 1 tick under it. That way, that extra tick of profit will give you $20 of profit. That'll pay for your commission and even some extra left over to add to your trading account. So be sure and watch. Once we satisfy that condition, this line will be moved automatically to 1 tick of profit. And if we hit the target and go through it, that line will disappear and you would have already made 50 bucks. So let's do that. I'm going to turn it on, maybe speed it up a little bit. Give it a little more time.
Target filled.
Target filled. I hope you're hearing my speakers through your speakers because I want you to know that your computer is talking to all the time these things are happening. So notice the red line did happen. It did get moved. So you now have automatically gotten rid of the green line. You've gone through the target. You've made $50 in closed profit. So that's one automation that's happened. Another one is the stop got moved. That's a second piece of automation. But since you took 2 of the 4 contracts off the table, you don't need 4 contracts here at break even plus 1 tick, do you? No, you just need the remaining 2. Look over here, it says 2. So it did more automation. It changed itself a second time. Not only did it get moved, it changed itself from 4 to 2 contracts. So if we don't go any further and came back up and hit that, it's a profit stop now, not a protective stop, you would have made not just the 50 you did down here where that little marker is right there. It would come back up and make another $10 for the remaining 2 contracts at $5 a tick, because this is the Dow. So that would mean you'd have had a $60 winner. But let's see if we can make more than $60. Let's turn it on. And what I'm going to do is speed it up to about 6 times normal speed. And then what I'm going to do is pause it and show you something. You see this blue dot right here, just like these other blue dots? This is our trailing stop indicator. Once that appeared up here, after you've scaled out, that is going to be how we automatically move our stop and trail it. But right now, this indicator is above where our stop is. So we need to connect the two. All you got to do is just right click and go through the little menu and connect it to the actual indicator. I'm going to give it a 2-tick offset. What does that mean? I'm going to show you in a little bit what I mean, because I could just have it track along exactly wherever that blue dot is once it moves down below where the stop is. But I've learned that if you use an offset, quite often price will sometimes come and tag that indicator and then keep on going. And you'd have been out of the trade, you'd have made some money, but then you would have left some more money on the table and you would have had the woulda, coulda, shouldas, and you would have said, oh, I wish I'd have stayed in that trade. Well, here's why I gave it a 2-tick offset. So let's watch what happens. I'm going to turn it on and we're going to speed it up a little bit more, maybe 15 times normal speed. Watch what happens when the blue dots get to the red line where the stop is. And
3-minute congestion canceled.
And in the meantime, in the background, oh, by the way, I'm going to pause here. You see how close this got to the stop? If you were trading by yourself, emotionally, you might have been tempted to pull the plug. You would have left money on the table because we're not done yet. And by the way, as I said before, this computer will keep talking to you and tell you about other conditions that are happening in the background. So you'll hear them as we keep going forward. So let's turn it back on and watch what happens when the blue dots, the trailing stop indicator, gets past. Every time a 1-minute bar finishes, that moves along with it. Now, as I said, I've got an offset. I'm 2 ticks back instead of being right at the dot. And let's pause for a second. I have some more to say. I had this on 15 times the normal speed. The market doesn't really trade this fast, of course. But you've got a full 60 seconds before a bar will start. And when the bar finishes, a dot will appear. And this will also move to the dot and then back off 1 or 2 ticks, depending on what you had factored in. Okay? So what I'm going to do is show you what happens when it hits this indicator, and we're going to re-engage it so we can keep going further. We won't be out of the trade. All we're going to do is re-associate it with the trailing stop indicator. So watch what happens. As this keeps going,
9-minute, 9-minute, breakout confirmed.
okay, well, we're getting other alerts there. But what I want to point out is it adjusts itself and holds back like a surface-to-air missile and gets closer and closer like it is now. Watch what happens. Okay, now I'm going to pause and I'm going to reassociate it, because if I had have left it right at the dot, we'd have been out there and we would have made a certain amount of money. But there's more gas in the tank here. So what I'm going to do is reassociate it so it can continue being automated. You normally don't have to do this. This is actually an exception, but I want you to see it. Now watch when I turn it back on. As each bar completes, a new dot finishes and the red line moves lower and lower. And if price starts to stall and backfill, you'll see those blue dots get really close and lock in the profit. As long as price is moving strongly, then the trailing stop will hang back, give it some breathing room. But right now, it's moving along nicely. Now it's coming up higher. Watch the dots get closer and closer. Watch the automation. It's real close. Almost. Is it going to go further? Don't try to second guess it. Let it do its job. See, it locked in more profit. Even more profit. So it continually adjusts itself until finally you are out of the trade. Let's open up and look at our profit and loss. Are you able to see the profit over here? I'm putting my cursor on it. It says $820. Type yes if you can see the profit. If you can't, you can always drag that GoToWebinar control panel out of the way. Otherwise, I am going to ask a second question, as I love to do at this stage. You have seen how this is a pure mechanical rules-based system. Getting into the trade with 4 clear, distinctive steps was real easy. It was not subjective. It was not discretionary. You had real readouts that gave you very specific feedback that let you know that you actually had a legal setup. And then once you were in the trade, 95% of all of that was automated. The only times I had to take any action was because I decided to give it an offset of 2 ticks and reconnect it one time. Otherwise, just let the automation go. So my question for you is, if you had a pure Boolean logic rules-based mechanical system that could adjust and adapt itself to what the market can give you, it knew when to scalp, it knew when to trail, would you like something like this? Give me some feedback if you like what you've seen so far. Give me a yes if you like what you've seen. All right. So at this point, what I'm going to do is close up this chart trader and hide it. And I'm going to go back to the presentation and wrap things up. Would you type yes and let me know if you can see the new screen? Give me some feedback, please. Are you there? Hello? Are you folks there? Okay, I'm not getting any feedback at all. I need to know if you guys can hear me. I'm going to mute. Can you folks hear me? Can you folks hear me? Hello, hello. Oh my goodness gracious, I'm not getting any feedback at all. All right. I'm going to try to reinsert my microphone and see if that helps. So let me unplug this. Okay, can you folks hear me now? I've been talking and talking and I haven't gotten any feedback at all. Are you there? Hello, hello. I'm not seeing any feedback at all. Everything seems to be frozen and I don't know what's going on here. Are you folks able to see my screen? Can you hear me? Oh boy. I'll tell you what I'm going to do. I'm going to go ahead and continue as if you were here, and you'll just have to watch the replay. My apologies. I'm not sure what's going on. I've never had this ever happen before. So I'm going to go ahead and move to the next slide in the presentation. Are you able to see this? I'm not seeing anybody. Oh, you know what the problem is? I didn't scroll down. Thank you guys. My bad. All this time you were giving me feedback and I hadn't. Okay. All right. I'm very relieved. I was really worried that you folks were not able to see things. I hadn't realized that your feedback in the chat window had been scrolled up. So let's keep going and I'll wrap things up because I know you've been very patient. Look, folks, this is a trend following system, which in my opinion is the most profitable way to trade. It's certainly the easiest way to trade. And we certainly do utilize tuned cycles-based multiple time frames. In plain English, that means different chart settings. So you can have that zoom lens effect, allowing you to adapt to what the market can give you. Plus, we always keep those risk levels really, really small. $100 is the most you can lose on a per contract basis if you're scaling out. It's even less, 70 or less if you're scalping. And I showed you all the automation throughout the way I displayed that trade. Ah, okay. Ronald says he likes the automation. He wants to install that. I'm not sure how you're going to be able to do that without my system, but I invite you to talk to me. I'll be happy to give you some feedback. But let's keep going. This is really a flow chart, if you will, that reminds you that this is a Boolean logic, rules-based, mechanical trading system. And all the steps getting you into a trade are super clear-cut. First step, trend agreement. The 1 and the 3 need to agree. Best is if all 3 agree. And if you got that, then you wait for a pullback to the moving average. And you got the feedback in the data box that shows you tick by tick as bars by bar goes as you're getting closer and closer. And in our example, it even touched the moving average. Then you have independent uncorrelated confirmation from the oscillator, which just has to simply get overbought or oversold. And finally, we keep that risk under tight control. Okay? So these are the 4 steps that it takes to get into the trade safe trade. This gives you pure consistency, and that's all you need. Because if you really want to have a roadmap that guides you to using all of this, not just the software, but my coaching, the trading room, and all of the tools, you want a roadmap that walks you through it. And that's why I include a full course. Now, it says 90 days here, and I'm not going to go through all of these little things that walks you through it because it is self-paced. You can finish it much, much quicker. But the reason that I want you to take your time is I want to be able to watch you take trades. I want you to be able to let me coach you and help correct mistakes. And by the way, you can get coaching outside of the room. You don't just need to be in the trading room to get my coaching. Very, very few people allow coaching outside of their trading rooms. You can actually call me. So I am accessible both in the trading room as well as out of the trading room. But I have an ulterior motive. I don't want to just show you how to use my system. My real goal is I want you to become a professional trader so that you can use this system like a business. If you can't use it like a business, you're an amateur. It's a hobby, okay? So let's wrap things up here and show you what you will get in the package. I already mentioned to you before that there are a lot of vendors out there who call their software a system. Actually, I'm going to just be bold and say they're lying. They call it that because it sounds good. There are maybe 6 or 7 true Boolean logic mechanical trading automated systems out there in the market today. They start at a low end of $3,000 and go well beyond $10,000. I'm sure not going to ask you to pay that kind of money. But even if I did, I'd start at the low end and say, well, let's start with $3,000 worth of value. But you get me. I'm a very valuable part of all of this equation, right? Whenever I consult with corporate clients, I get $500 an hour. You get me for the entire duration of our support period. So that is worth at least $500 an hour worth of time. Hard to put a value on it beyond that since you get me more than 1 hour. But also, I get you off to a really solid start with the training videos. Once you're inside of our password protected members area, that helps get you up to speed so you can study the content before you even come in the trading room. I want you to be prepared in advance, and then I also give you a personal full 1 hour onboarding orientation, just you and I together. And this enables you to get up to speed so that you can join me in the trading room. How long are you going to be in the trading room? Well, a lot of people say you got to be there all day long, every day, Monday through Friday. I don't believe in that. I learned a long time ago that the average trader gets bored and they lose interest, they disappear. What I do is I try to make it worthwhile, and I give an intensive coaching session for 1 morning a week. The rest of the week, you do your own practice trading. You apply what you've learned because while you're in the trading room, you don't have to type to ask questions. Use a little inexpensive headset, and you can ask me a question anytime you want right in the middle of a trade. You can even ask me to look at your charts as you take a trade. Nobody else does that one, I can assure you. And I can help correct any problems you're having, coach you through any issues. And as you take each and every trade and journal each and every trade, as you build up your skill levels, you'll keep progressing through the course. But to get you started, I want to make sure that your charts are set up correctly. I don't want you to have to reinvent the wheel. It's a simple template that takes 5 minutes to install. And if you say, oh, I don't know if I can do that, I can't follow your instructions, even though they're real simple, guess what? I have a full-time support desk, and this guy can remote access directly into your computer and help you get the job done. Plus, you saw that indicator that shows you whether you're in a trend or in congestion, and it even talks to you. So that alone is worth $300. The 4 steps getting into a trade with all the other associated indicators that go with it and the feedback that you get from them, that's certainly worth $300. Once you're in the trade, you got 3 different exit strategies you can use. All of them are automated. They're certainly at least worth $200. And if you are in benchmarking, the average student during their 30 or more trades tends to generate around $3,000 to $5,000 worth of profits. That gives you a strong indication of what you can expect after you graduate. And while you are in my trading room each week, I archive everything that I've recorded. So you'll see and hear everything I do with my charts as well as your charts or any of the other students that are in the room. And by the way, you don't have to compete with scores and scores of other students. My average classroom has anywhere from around 6 to 8 students at a time. So you're not competing for my attention. You get a lot of personal coaching attention. You get some tips, tricks, and techniques videos in the archives. And to help you manage your trading like a business, you get a business plan that I personally review myself. And it's not just to give you goals about how much you hope to make. It puts guardrails on your trading. You're invited to put a limit on, hey, what do I do if I have 2 or 3 losers in a row? Am I going to keep trading, dig a deeper hole? Also, things like how much am I willing to lose in a single day or a week or my percentage drawdown. If you're a professional, you must address those things. And I want you to be a businessman or woman and put that in your business plan, and I'll give you feedback on that. If I think you need to make some adjustments, I'll let you know. And of course, to keep you on track as a business, you journal each and every trade. You've got a macroed spreadsheet so that you can always benchmark yourself even after you're done with the course. And of course, last but not least, I mentioned at the outset that in a prior profession, I used to be a psychotherapist and a performance coach. I have an extremely powerful tool that helps you forge diamond hard discipline. It was used originally to help soldiers in the first Gulf War 30 some years ago when they first came back with PTSD and medications weren't working. It helped neutralize those automatic reactions. They'd hear a loud noise and they'd react. Well, we've taken that many steps further. Actually, professional athletes use this tool themselves so that they can be very consistent. Well, what I've done is I've readapted it for trading purposes so that you can be a trading machine. If you add this all up, you got over $11,000 worth of value here, folks. So I'm not going to ask you to pay that. I'm not even going to ask you to pay what I normally do, which is $39.95. And I've had students who have paid it and have came back and said it was worth every penny and more, far less than what they'd spent on other packages. Instead, I'm going to give you an opportunity. No, I'm not going to ask you to do it right now. No pressure. I'm going to give you a full week to think about it. You can get half price off, $19.97. If you want to know whether you're qualified to get started today, you're going to want to talk to me. Yes, I know you can go ahead and buy it right now if you're that convinced, and that's fine. But I know a lot of you have questions. So in the follow-up emails that you're going to get after this presentation today, you will have a link not only to the replay, which I hope you do watch, you will have a link that will take you to my schedule so that you can see available consultation times. And I solemnly promise I won't twist your arm or pressure you in any way. Now, even if $19.97 seems like too much, you may say, oh my gosh, I'm used to only spending $200. Well, that's for an indicator. That's not a true system. It's not coaching. It's not a complete course. It's not how to run it all like a business. This is far, far more value than just a standalone indicator. So even with respect to that, I know that might be a lot for some of you. I have payment plans available. So I'm going to give you a full week to think about it until midnight Pacific time of next Wednesday. And if you want to jump to the head of the line and not wait for that email to schedule your time with me and get all your questions answered, here is a link you might want to write down: daytradesafe.com/apply now. Write that one down, because when you click on that link, not here right now, it's not clickable, but when you put that link in your browser, it'll take you to my schedule and let you see the available openings. Please do it, because they fill up fast. Here's what happens during the consultation. You've locked in the discount. Because they do fill up fast, sometimes people say, oh, I couldn't get a slot available till after the deadline, Michael. Well, don't worry about it. I will honor the discount even though it's past the deadline, because I know you made a good faith effort. But once you do schedule time with me, you got to call me. I don't call you, you call me, and you're going to get reminding emails and a reminding text, etc. And we're going to have a real valuable conversation. We'll cover any and everything you feel is important to you as a trader. I will even help diagnose issues that you may be having with your own trading. Even if you don't decide to go ahead with TradeSafe, that's okay, because my goal is your complete confidence in TradeSafe. Now, we talked about payment plans. Here is how flexible we can be for you. If you're a U.S. citizen, I encourage you to consider, when you do decide to click on the link that takes you to the page that lets you join TradeSafe, yes, you can pay in full right up front, but if you want to, you might want to click on the gold button that says PayPal. Now, regardless of your opinions about PayPal, don't worry. You don't need to put money in your PayPal account to do this. You just got to get it set up. It takes a minute or two if you don't have a PayPal account. And once you're inside of their portal, you will then be given a quick 2-minute soft credit check. If they like you and they think your credit is good, they will give you a full 6 months to pay them back. They'll pay me up front, but they'll give you 6 months to pay them back. If you pay them back, and that's on your own schedule, they won't even charge you a penny of interest. See, this is much better than a credit card. So I recommend you try the PayPal approach. If you qualify, you'll save all that interest. But if it doesn't work for you to use PayPal, I do offer my own in-house payment plans. And yes, because I'm assuming the risk, I do have to charge some interest. So I do recommend that you call me. We can discuss it in detail. Here's that link again, daytradesafe.com/apply now. And I will honor the discount. Non-citizens, Hans, this is PayPal's restriction. I wish they would open it up to people who are not a U.S. citizen. It's unfortunately only for U.S. citizens, and that's a PayPal policy. Sorry. All right, let me see what else Kelly was typing. I missed it before. Kelly, that's stuff you need to talk to me about. Schedule time with me. I don't have time to go into that. That's way too many variables. Okay. And let me see what he's saying here about something about a bargain. I have to click on this. Oh yeah, he's saying there are indicators that cost anywhere from $300 to $1,500. Yes, that is true. All right, great. So I want you to please pick the best date and time that works for you. Really, you got nothing to lose. There will be no pressure. You will enjoy that visit with me. And when you come away, I want you to feel your time was well spent. But do keep in mind, the slots fill up fast. There won't be any sales pressure. Oh, and do one more thing, because I bet a lot of you watch a lot of webinars. Please watch the replay of this one before you and I get together on that consultation call. I need you to be familiar with what you just saw. I can't recreate this whole webinar in a phone call. Okay? So please do that. Now, there may be one or two of you who either have already seen this and you're ready, or maybe you just know this is for you. If you want to just jump right in, you don't need to talk to me. Here is the link. You don't even need to wait for the email tonight. It's daytradesafe.com/I want in. That's all one word, I want in. So I want to thank everybody for being here. There's that link for scheduling time again. I have time only for one very, very quick question because I've run way over and I apologize for that. That was because I messed up on thinking that there was a breakdown. Anybody got a quick question? Type it quickly. I'll wait a few more seconds. Otherwise, we are going to wrap it up. Hi, it's good to see you here, Key. I'm actually seeing 2 or 3 of my students that are actually here today, and I don't know why you got this invitation unless you're on some other mailing list, and I can't control that. So just for your information, if ever you get an invite to attend these types of webinars, and you already are a student or have graduated, you don't need to show up. The replay email will have the link, yes. It will show up. And that'll be later this evening. So give me some time. I have to process this recording because I am recording this. All right, no more questions? I want to say thank you, everybody. I appreciate you taking the time out. Thank you, thank you. I appreciate that positive feedback. You're very, very welcome. Thank you so much. Oh, thank you too. All right, so everybody, thank you too, Arush. I want to say thank you and trade safely, everybody. Bye-bye.